Hello and welcome to Blythray Business News. For this edition, we're talking about Tower Resources, Tower, listed on AIM in London with a ticker of TRP, a market capitalisation of around £8 million sterling. But we're not talking to the company. I'm delighted that for this edition, I'm joined by David Mirzai, the energy analyst, the oil and gas analyst at SP Angel, who is a very close watcher of Tower Resources. David, love to have you back on the show. Before we get into the detail and the recent news that Tower's been putting out, could you please give us and give the viewers just a very quick overview of Tower, its operations, what it does, where it does it?
Indeed, and hi Tim, thanks for having me back on. Tower Resources, as you've said, is an AIM-listed E&P. Their key asset is an undeveloped oil discovery offshore Cameroon, which offers the potential for a fast-track development opportunity subject to a successful well test in Q4 of this year. The company also has licenses in underexplored frontier areas offshore Namibia and South Africa, where there's growing interest in deep water exploration following giant discoveries made recently by large companies such as Total and Galp.
Okay, so let's start by looking initially at Cameroon and Namibia. At the beginning of this calendar year, 2025, the company announced two prospective farm-out agreements with Prime Global Energies, which I believe comes out of Pakistan, for both licenses. What does that funding mean for Tower?
Well, Tim, as a small cap E&P without production assets or revenues, Tower does not have access to free cash flow from its operations in the same as some other larger mid-cap E&Ps that your listeners may know. So in order to attract an industry partner as part of a farming process, that's essential to their business model because they need those funding partners to participate in exploration and development of their licenses to bring them to fruition to a cash flow basis. So Tower's farm out agreement with Prime, that will bring in some cash to cover back costs, but crucially, it will also deliver a $15 million gross contribution to the forward work program. Now, that forward work program is expected to be the drilling and the testing of the Enjom-3 appraisal well in Cameroon later this year. And the company expects that $15 million gross contribution to fully fund that well through all of its drilling and testing.
Okay, let's just focus on Cameroon for a minute then, because as you mentioned the Enjom-3 well, I think 10th of June this year, the company announced it's secured a rig. No small achievement in its current market. It's got a rig for the spudding of the Enjom-3 well. What can you tell viewers about the scale of that opportunity for Tower in offshore Cameroon? And second, can you give us a bit of an insight into the arrangements, how you see it progressing as we move into the second half of this year?
Of course. The 2008 Enjom discovery that Tower have offshore Cameroon has about 20 million barrels of contingent oil resources waiting to be developed, which are already discovered. This sits alongside a similar amount of prospective resource upside, which comes from low-risk drilling targets, which they still need to drill to confirm the oil is there. However, drilling and appraisal well on this initial discovery has always been needed to confirm both the volumetrics and the commerciality of the discovery, and that would support access to project financing in the case of a development. So hence, following a successful well, which they aim to drill in Q4 of this year, this development would be very material to a £10 million market cap company, even before we consider the potential upside from additional undrilled intervals.
Okay, so
now,
good progress.
What have they been doing of late? Well, Tower has now awarded a conditional rig contract to Advanced Energy Systems to drill the Enjom-3 appraisal well at Enjonji in Q4. With that rig slot now in place, the company, we hope, can go back to the Cameroon authorities to seek final approval of the farm out to Prime and also a license extension of possibly 6 to 12 months to complete the drilling of that Enjom-3 well. On successful testing following drilling, we would expect Tower to confirm the commerciality of the Onjonji oil discovery, and that would support the sanction of a fast-track development that could deliver first oil production and revenues as early as 2027.
Okay. Sorry to interrupt you there, by the way, but
No,
that's very good progress in Cameroon.
yeah.
We now move to Namibia. You mentioned that Tower has secured a farm-out agreement, again with Prime for that license too. What's your view on the opportunity that this presents for Tower?
So at the same time as they were doing the farm out in Cameroon to Prime, they were doing a parallel farm out to Prime of a non-operated interest in the offshore Namibia license. That will result in a cash payment on completion. But in addition, the deal enables Tower to split the costs of the exploration program going forwards, and that reduces the sunk capital required by Tower in this less mature part of the portfolio. In short, this transaction, along with the one in Cameroon with Prime, should absolutely transform Tower's funding position once they move through to completion. Now, as with the Cameroon farm out, the agreement is for a non-operated minority interest in Tower's PEL 96 license offshore Namibia. And that means that Tower retains operatorship, it retains control. It can dictate how quickly the process moves forward, obviously while still adhering to the requirements of the license conditions. Now, Tower has laid out a 2025 budget for Namibia with plans of £1 million of capital expenditure. Now, once the farm out has been completed, it will be able to share this budget with its new partner, subject to government approvals, of course. What you would then expect is the revised partnership. What they're trying to do is they're looking for approval to enter the next exploration period of the license with a work program that includes 2D seismic reprocessing work. That 2D seismic reprocessing work is needed to reevaluate and prioritize leads in the PEL 96 license area. From that, they would enable the partners to then select an area for a more detailed 3D seismic program. Once we get to the 3D seismic program, appreciate, Tim, this is probably at least a year or two down the line. We would expect Tower to bring in another larger farming partner who is looking for direct exploration exposure to high risk, high impact frontier drilling in the Walvis Basin. And, for example, Chevron, the large US super major, they acquired an interest nearby in PEL 82 last year. But you'd certainly be looking for someone to come in ahead of any capital intensive parts of the exploration and seismic program.
Okay, that leads me very nicely into my next question. David, you work in a stockbroking firm. In your view, what's the fundamentals underpinning the investment case for Tower?
Yes, well, I'm sure it won't surprise anyone to hear that investment capital has been scarce in the small cap E&P sector in recent years. The market's questioned the need for more oil and gas within the context of the transition to net zero, especially with what you hear both from public bodies and within the media. However, the last 12 months, certainly, I think the market has now understood that we'll be using oil and gas for a lot longer than previously guided. And larger companies will therefore need to replenish their reserves both through exploration and development opportunities. Now, the E&P sector of the last 2 or 3 years has been increasing CapEx budgets for both drilling activity and M&A, as they become increasingly comfortable in recycling their free cash flows from existing production back into growth assets that will enable them to support long-term shareholder returns, which is effectively one of the key reasons for interest in E&P stocks at the moment. Now, access to these types of growth opportunities drives the investment cases for smaller E&Ps like Tower. For example, the proposed Njonji development ranks very highly on a global basis in this context, as there's relatively few low-risk greenfield opportunities left in the world that can be brought into production both quickly and with minimal capital expenditures to first oil. We certainly expect an overall budget of less than $100 million to build a production base of in excess of 10,000 barrels a day. And in the context of a global development schedule, that's both very quick and very cheap.
Okay, we don't like cheap, we like value for money, but I take your point. Final question, David. Look, you've made the investment case. The company, Tower, has made the announcement about the rig. Following that, does that change your view at all? And what's left for the company to do?
Yeah. The recent rig contract award was always going to be the first of three components that need to be completed. This is along with government approvals for the Farmout and government approval for a license extension. And you need all three of those elements to be able to drill the appraisal well. So we expect the latter two elements to be approved in the coming months by the government. The government's been very supportive in the last few years to Tower's needs and requirements, as it's been impacted by things like availability of drilling rigs and obviously COVID. And that should enable the drilling of the Njon-3 appraisal well in Q4 of this year. Now, with the financing in place following completion of the farm-outs, investors can then fully focus on the opportunity represented by a fully funded appraisal well on the Njonji discovery. And they no longer have to worry about, can I bring a partner in? Will I need to find additional money? Will my rig turn up on time? Once you're focused fully on just that rig, which is drilling that well, you can then look for the test results, which hopefully should come available quite in a matter of months after drilling commences. Investors should then be able to see where a successful test on that well will enable the project to move forward into the development phase and towards first production and cash flow, probably within 18 months. It's very shallow water. It's a very well-known and understood development plan. Now, as well as looking at the company and their ability to do it, if the company chose to, this option would also represent a very attractive opportunity for E&Ps already active in West Africa and looking for new sources of growth to their production profiles.
Very positive. Thank you, David. And quite, as you said, shallow water and short timescales. David, thank you for being with us today. That was David Mirzai, oil and gas energy analyst at SP Angel. We've been talking about Tower Resources. If you want more information, you can find Tower on the London Stock Exchange on the AIM market, a symbol of TRP. That's it for this edition of Blythe Business News. Thank you very much for watching.